Good morning, SMF Street Traders. Here it is. Pre-market time is 5:59 a.m. Pacific Standard Time, 9 o'clock Eastern Time. The market's going to open in a half an hour, and what we're going to be taking a look at is the bear and the bull, but most importantly is let's take a look at the gap down list. Monday morning gap down list is Baidu is gapping down. So the gap down list is not heavy as far as you got GTSI down 2.85. The one that you're going to focus on is just the invert of what you were doing on Friday. And Friday was that you were selling short the bull and you were going long the bear off of the bottom. One of the key elements is that the gap down list is and this is the Nasdaq, gap open down. Netflix is down another $1.06. That is one we're short and have been for a number of days. Google's only got a 62 penny gap down. I did the Google charts on Sunday to show you what that monthly looked like versus that weekly, but you've got an underlying good support at certain key price action levels. Now, we're going into an earnings season, and this is the beginning of it. They walked this market in September. There was no asset allocation models going into play. It's something that can happen here and now. And what do I mean by that? Let's take a look, before I go into that, let's take a look at the gap open up list. Now, we got a DDMX that's up there. So this is Actel. They're going to be bought out. Exclude that from your short. DDMX, I don't know very much, but it's a 5.79 gap. So when you take a look at both the gap up and the gap down list, they're kind of like mixed. Okay, I don't have that much that's gapping up huge. I will tell you, though, that this bear right here, the bull and the bear, both are right here. This one's gapping up from the closing price. That's the bear. It's going to gap up. It's going to hit it. At that time when it reverses, you sell short that. And the minute right in the same trigger, when this bottom left elbow gap down 108.96 to 107.71 by 107.79, just so happens to be some of those lows last week where you did have that bounce. One of the things you're going to be focusing on this morning is the VXN and the VIX. The TYP, TYH, is the bear 3X bull and the bear 3X. Both of those are going to set the tone. With looking at those, you're going to know where this market is at any given minute. Now, not only are you entering the earnings season, but then equity prices are extremely bloated, as you know. So basically, what you want to do is go back and look at the earnings video. It talks about it right there. What we will do, we're going to look at going long off the bottom here. When your platform comes down and it hits, you're looking at that mathematical equation, 108.96 to the very bottom is the ratio, left elbow ratio gap down, that you have mastered and loved so much because it works 100%. You don't pull the trigger, it'll leave you behind. You do execute at the right time, you'll make some money. The other point of it is this. In your platform, this market has got a lot of economic data coming out this week, and we covered that in the video yesterday. You got ADP on Wednesday. Then you got the unemployment, and all eyes are going to be on all of it. And the thing about it is that, look, I will just tell you, that September rally was a gift because they bought back all the short interest. They knew after our August selling that we had and the shorts that we did during that month, it was time to come out because the call side was real cheap, naturally. The call and put side to these markets are still in balance. There is no balance yet. That means in order for there to be balance, which there will be, is that equities got to come down. They will come down. The thing about it is the major shorts that some of these, like the Baidus that we're holding, Some of the Googles off of those highs up there around that 535 handle. These are trades that had gone too far too fast. So the short-term short, or whatever the case is working fine. The other thing that people need to know, that buying this one here, once you do get the entry, you've got to watch that if this thing goes from 0 to 5 on the open in your system, but only goes up to 45 and doesn't go north of 45 and stay above there, you'll be able to see the whole market, and you'll know exactly where the strength is. So buying off of that bottom, you go up a 369, and if it stalls at the top of the bar, bam, you sell it, because you don't want to run the risk of it breaking below half of the SMA Pro Trader bar. So as to the directional momentum, is where is that bull really going to be, and where is that bear really going to be? The thing about it is, there is a major bear and bull scrap, and what we're going to do is measure all of what our system will tell us, because if it stays below 45 all day and goes down to 0, then it comes up to 25. These are very short-term trades. Rather, the right thing to do is to make sure you're not caught in that narrow range consolidation on entry and exit. If you do, and you do get stopped, you better be triggering it to go short and not waiting around on the matter. So basically, that's the bear and the bull along with the Nasdaq comp. This is what these two instruments refer to. So I'm going to move on to the NYSE, the next one. And just remember one thing. If we're getting diminishing price movement off of the bottom, meaning that the distance of that trade is not going to go that far, it's good for a profit. It's good for an entry and an exit and a profit. But the key is that if they roll right over, then that means that the tech sector would be getting absolutely weak. All right, that's how this is going to be. Okay, so you don't have a big conviction on the gap open, but on the other hand, you've got a narrow range gap down. So that way you can see the total of what you need to see. That's how they react. We will set alarms. I will give alarms off of the video for Netflix. And once again, we do like this trade, just so you know. That's that 280 call here. We also have some put options on that very same trade below the market, as you know. 260 puts, protected position. So basically, that's what we're going to be looking at, and we're going to be looking at the relevancy of momentum so that we can gauge that first hour, that first 15 minutes, and where that bear and bull end up scrapping it out.